Hello everyone, welcome back to my channel. If you've clicked on this video, you're looking to find out why some order blocks hold and why some order blocks don't. I think over many months of backtesting and data, I've found out the characteristics to the so-called perfect order block. And in this series, I'm putting it to the test to see if I'm right. So if that interests you, like, subscribe, and follow me along this three-part series to find out what makes up a perfect order block. Enjoy. Let's get into it. As you'll see, if you watched the last video, what I'm trying to do is really go super strict. I'm trying to figure out what makes a great point of interest or order block, something that's really high probability. As a professional trader, I'm very aware that nothing is 100%. Anything can happen in the market. It only takes one big entity trader to think different from you, and it can ruin your whole trading idea. But as we know, patterns repeat themselves. Things do a fractal nature in the markets, and we tend to see things that play out a lot more often than other things. And that's what I'm trying to do with the order block strategy, trying to identify what makes a high probability order block versus a lower high probability order block, and get some data on that, and see how it really performs. You'll see in the last video we didn't take a single loss. It was a little bit, because I haven't backtested so strict like this, it was a little bit tricky. I had to go back and review all the trades and see if they did all fit the rules that I was trying to, so I could get some accurate data. And there was a couple that, because I didn't have my indicators on, I didn't realize, especially with the imbalance below or above a POI. It's something I really want to look into, because often with order block strategy, we can neglect these imbalances or neglect liquidity, and we become liquidity. So I'm really trying to build data on that. And, if it's more likely we're going to get swept on the order block, maybe we can develop a sweep entry technique as well to become even better traders. So even if we do take the first loss, we're back in there, because more often than not, our bias for direction is right. It's just that the market is always hunting for liquidity. And unfortunately, that is what you become, as we all know many a times. If anyone denies that, then they're lying. So here we got, my rules for the OBs. I wanted to have swept some liquidity, like most of the recent highs or lows. This is on the 15-minute time frame, a bit more flexible with my daily and 4-hour. I'm more interested in extremes and flip zones, which I'll explain further. But on the 15, where we're entering off, I'm looking for imbalance coming out of the point of interest, or at least still left over in the leg that the point of interest is in, or the order block, whatever you want to call it. It has to have caused a break of structure with a body break, not a wick break. And I now am looking and noting, and we'll be looking at seeing if there's potential options to trade the sweep if there is imbalance directly above or below, and see if it makes a bit of a difference depending on how the price comes into these order blocks, whether it builds liquidity before entering the order block versus just coming straight in and the order block ended up being the liquidity. So there's a few things we're going to note down. That's the rules there. I'm going to get into this one pretty quick, because I'm going to do about 4 or 5 videos of this strict one, just to give some decent data behind it that I can work with. I probably will end up doing more. We'll see. Got a few plans that I want to record, so the recordings do take time. But going to build that data up as well. I'm just doing this on Euro USD. That's the main pair that I trade right now. But afterwards, I'm looking to test the strategy on a few different pairs, because when we have these strict rules, we can quickly look over at a chart, mark up the highs and lows, mark up the points of interest that we're interested in if they tick all these boxes, and then if we have nothing there, we move on. That's what the benefits of having strict rules are. And a few other things I'm going to be doing. I won't be holding trades overnight, because I don't do that in real life trading at the moment. My targets will be, if we're pro trend, they will be with the next break of structure. If we're counter trend, they'll be to the next supply and demand. And what I do with my stop losses, underneath the point of interest, I usually leave 0.5 pips for spreads. And I'm entering on the 15-minute time frame with my orders, my risk split between the 25% line of the order block and the 45% line of the order block, which I'll explain further when I can show you there. But I just wanted to go over exactly the strategy I'm going to be testing today. It's based around the Paul Trades Forex, or Trade Forex with Paul, FTR strategy. I'm just really getting strict with the order blocks that I choose and seeing how the results come out. So let's get into it. I'm just going to hide this for a second. Okay. And then we will get started. So I'll just let you in. Quick thing. I'm going to turn these on this time, because I did miss a couple imbalances because I didn't have these marked. This is an indicator that just marks out the imbalances here with orange. You can change the color whatever you want, but it just makes them easy to see, easy to note, so I don't miss them like I did in the last video, which is kind of pretty hilarious actually. The next one I usually turn on in my sessions. You can't really see it. You'll see it on the lower time frame. It splits the sessions like Australia, Asia, London, New York, all up, so then I can really be aware of the opens and the closes and where the volume's going to be. This is one I found recently. If you watch any of my other videos, you see it. It's quite a good market structure indicator that I do use in confluence with my own market structure. You know, sometimes I don't fully agree with it, so I don't always like refer to it, but like, you know, 95% of the time I really do like it, so I do use it just to quickly mark up. You know, so like this, I'm super happy with this. There's like a few things that I would come in here and change or add to it, but otherwise I really like to look at that. So let's start from the top down analysis, looking at the daily. So I'm just going to mark out the most recent, because that's all that's really important to me. So I'm going to write it out as well, because obviously this indicator just shows whatever time frame you're on. So as soon as I go down to the 4 hour, it won't show the daily breaks of structure anymore. So I want to draw those in myself. Yeah, so let's get going. Daily high. Week high. If you're confused about week high or the low high or anything like that, the breaks of structure, I think 2 videos ago, I think it's called How to Become a Profitable Trader Today. I go into a fair bit of detail about that. So I recommend going and watching that one, because just otherwise the video just runs super long if I'm explaining, you know, that every single time. I really we look at the premium and discount zones. It's actually quite, you know, similar to, I guess, what you would call like SMC style trading. I think that's like the umbrella, and we've just sort of, Paul has sort of mixed it into his own, and then we've refined it to our trading strategy. So you'll see quite a few difference. We're looking for, like, you know, we're really trying to continue. So we're in an uptrend on the daily. We're trying to take, you know, find longs out of here on the lower time frame to follow the trend back up, essentially, is what we're doing. So we've got the daily market structure. We've got our extreme point of interest on the daily. We've got our discount levels, so we can see that we've just tapped into the discount level, and we probably, I don't know, we might have just front run the daily point of interest. But this is definitely this area here. I think we talked about in the last video that this is where we're going to be looking for reversals to go long again. You know, some 4 hour chalk, then go down to the 15-minute, and we want to see 15-minute strength chalk, and then we're longing it up to however high we take it. So yeah, I think that's pretty much all that I'm interested in at this point on the daily. So let's move down to the 4 hour. Okay, I will turn that. I don't know if you can hear the notifications going off, but I'll turn that off so it's not so annoying. Okay, so pretty much we're daily uptrend still. 4 hour, we've had, you know, it says 4 hour break of structure. I would class this as, you know, what I talked on the last video. So sometimes I don't fully agree with it, but essentially it's pretty much right. What I would say, we had that liquidity sweep. Where is that? You know, we had this, and then we ended up with our chalk on the 4 hour. I just like to go through this because it's like really nice to get reversals. Obviously, something I didn't mark out that I marked out last time. The reason we would have been looking for reversals here, let me just zoom out, sorry. It's just when I make these videos, you know, I've explained this already. Oh, let me zoom out again. Oh, every time I double tap. Is that we have an old, you know, daily supply or order block, whatever you want to call it, whatever makes you happy there, which was super valid. It was really nice. You had this one swept those highs, and then it finally swept that high, put in the last high, huge amount of volume came in, huge amounts of imbalance was brought in, which meant it was big people moving the market, which meant, you know, potentially this area when it comes back into it is defended by whoever moved it then. And we ended up with a break of structure over here. So very valid area to look for even short-term reversals. The market completely, we don't have to come and, you know, change the daily trend, but it's definitely these areas that we're aware of for taking reversals. And because we're on the day trade, you know, we don't need the whole market to reverse. You know, we're just taking intraday trades holding them. That's why we're entering on the 15 to get quite sniper entries, So even if you're on the 4 hour and you just trade the 4 hour on the daily, so okay, we've tapped into, we've found a sweep. Look at that, and the low that led to the sweep has now been broken and closed. This is our candle that took all the liquidity and dumped it. Line her up with the 50%, and you pretty much just short it down to the daily demand, and that's how you could trade it on the high time frames. You're just waiting a bit longer, and you're like, this is, a couple of weeks worth of holding the trade. But, if that works for you, that works for you for sure. But anyway, let's keep moving forward. So since then, we had the chalk. We've had some 4 hour break of structure. So 4 hours in the downtrend at the moment. As we can see, we've got like a daily week high. Pretty much we're looking for some sort of, looks like we just tagged it, but can imagine we could come deeper into this area. And so let's have a look at what we might be looking for reversals to follow us down. I'll, mark out a couple areas. We've got this last one here. We do have balance above, so very likely we could swing the highs. So we wouldn't be entering a risk entry out of here. We'll be looking for like a 15-minute shock to come down. I've also got a couple other areas. Nice area here. And yeah, up there. There's probably too many to mark. This would be our first point of interest. And, anything above that, if we've got like a nice big close for a 4 hour chalk, then we could be looking like we're moving up. But until then, we're on the 4 hour looking for shorts. So let's jump on the 15. I'll turn this market structure back on. Let me just close a couple things. I don't know if you could hear all that noise, so sorry if you do. It would be annoying. I'll try to turn it all off at this point. Is that showing up? Oh, I haven't turned it on. This is where it comes in handy. So yeah, pretty much, this is where it's like I would, I don't really see what I'm looking for. If you have a wick like this, to get a break of structure, this is the next one to have a break. Otherwise, for me, this is just this wouldn't be a break of structure here for me. This is more like a, wick rejection, fail to close below, and then a 15-minute chalk. So let me just mark this out. So this is what I mean. I don't always agree with it. So sometimes I don't use it because I don't want to confuse people. So you pretty much, we talked about in the last video right at the end, and we pretty much had the chalk here. We had the sweep, then the chalk, and then we were just looking for longs really until this point, essentially. And then we were going to be looking for some sort of rejection, like some sort of bearish chalk out of there. But we have tapped this daily demand, so we weren't going to risk entry from here. We were going to wait for some 15-minute weakness, as we know we could just keep pushing up here. But at this point, really, there's nothing that I would look, at that break of structure, wick, okay, break of structure. This is the hold. We've got balance below. We held here. Looks like we're going to wick rejection again. So we're a little bit of no man's land. I'm looking for, us to get in somewhere here, and then we get a bit of a bearish chalk, or even like a sweep of these highs, I can imagine would happen, and then a bearish chalk and we come down. I could probably delete this because we have reached it. So we know that we've retraced back into it. So it's just sort of in the way now. But yeah, pretty much let's get started. I'm going to turn the indicator back on because maybe it will save a bit of time if I agree with it. Otherwise, I'll turn it off. But pretty much, yeah, we'll just say this chalk, break of structure, essentially break of structure. Yeah, so we're getting like a little bit of wick rejection here. If you weren't following the strict rules, you could take a risk entry out of here, essentially because it is something that swept liquidity, broke structure, and has imbalance. Could always see something come out of here. But because there's this imbalance below, we're going to leave it for now, and I want to see how it reacts here to see if we do get a sweep, and I will note it down later. But yeah, let's get started. Just an Asia session, nothing really. I'm going to be talking about this Australian sweep a little bit if it does occur, because I think it was super interesting, something I found out just while the month I was over in Australia. It doesn't happen all the time, but when it does, it can be powerful. You can sometimes get the low or the high of the day and just ride it all the way through London session. So it's definitely something to be aware of. Well, okay. Keep going. Just getting a call, so I'm just going to pause it for a second. Sorry about that. Just getting a call. Where were we? So yeah, I'm pretty happy with how this has drawn up the recent highs. I have a feeling we're going to push one more and we get some sort of shock, but let's just play it out. I'm going to try to zoom in for you guys. Another sweep of the highs. We're just waiting. We want this. Oh, all right. Let's pause for a second. Maybe that is all we're going to get. Let's have a look at the 4 hour. Well, there's still a slight amount of imbalance there, but we know it doesn't have to fill it. Let's have a look back on the 15. I definitely like when New York sweeps it. Okay, let's go. So now we had a final sweep. We got a 15-minute chock. There's no imbalance on the 15 minutes above. The only thing I don't like is that we haven't tapped into the 4 hour yet, and there's imbalance on the 4 hour. It's a bit risky. So but let's just take it. I bet you this is going to sweep the highs once more. I can just feel it. There we go. So we've got 15 minutes, swept the highs, caused 15-minute chock, which is I classify as just breaking the low, last 50-minute low that led to the sweep of the highs. Some people, they want chock by breaking the last low of the 15-minute. But this is more of like a risk reversal type of thing, because you're looking at a change in the character of the market. We were once pushing up and now we're breaking lows that we weren't breaking before. So it's usually only if we get a sweep that'll be this aggressive, especially on New York. So pretty much, let's have a look. I'm tempted to go a bit of a wider stop, but I won't. Okay, this will be targeting the lows. Because we're in this 4 hour leg, or 15-minute chock, we're looking to continue the leg down to the low to break structure. You could target the liquidity if you want to be more conservative, but realistically, we're in a 4 hour downtrend right now. Short-term 15-minute uptrend just to continue the 4 hour downtrend. So let's see how it plays out. Okay, see, this is why my research is it's invaluable. So the reason I explained in the last video, the reason I moved to the 45 is that often I was getting slightly front run on the 50, which was quite annoying. So look at this, we would have been tagged in by the pip, which is pretty amazing on the 45. And so that's what I mean. I'm splitting my orders, my risk, so say I'm risking 1%, I'll put 0.5% on the 45 and 0.5% on the 25, because we don't always get that deep push into it. So have it on the 25 is pretty nice. So that's a really nice tag in. Let's see how we got. This is going to be the area that we need to get past. We could easily sweep these lows and start pushing up again, because we are still in this 15-minute range here, and this is the extreme point of it. So it's pretty ambitious, that target down here, but let's see how it plays out. Looks like we're going for the highs again. But let's see. Essentially, what potentially this could be is we're retesting this big wick that we got entered on, because it's a nice area for a confirmation entry, because we've swept highs, and then we pushed down and we've broken structure here. We haven't broken like main structure, but on lower time frames, it would be like a nice high and break of structure here, and then you've got liquidity. But that doesn't match a 15-minute entry, so we're just sticking with this one here. But I just wanted to explain that to you. I guess, yeah. We're gonna leave this to show what can happen, but essentially we probably would have closed it out at, it would have been quite not the best, maybe like 1.2 and about 2R, 1.2 and 2R. I'll leave it open to see if it plays out, but as we know, we weren't holding trades overnight, so we'll leave that for there. Okay, we still don't have anything that matches our interest, has our interest here. Quite an ugly range here. If you hold trades overnight, you'd be still in this one. We do have a chock here, but it didn't take all the liquidity. We've got liquidity still lying here, liquidity lying here, only one sweep here. So it's not very high probability. It doesn't match our entry criteria. Let's see what London Open does. Okay. There we go. Looks like like we said, we wanted to keep an eye on that. We weren't taking this trade because it had that imbalance above. But this is what I wanted to sort of look at. So a balance below. So this is what I kind of explained at the start. We've got this imbalance here directly below. And often I want to see the impact that has on whether we get swept or if it holds. And so what I'm starting to notice is if the market like this produces enough, see this held this low, not really that one. Okay, that one's already swept. So if it produces enough liquidity above the point of interest or the order block, then it won't need to use the lows of the order block as liquidity and tap into this balance is what I'm finding. But that's what I'm trying to build a bit more. And liquidity I talk about is like stop losses from people. People that have gone long here, their stop losses there. People have gone long here, their stop losses there. This held the lows, so these are intact. These are intact. When we push down like that, we stop all these people out, tag into our point of interest. The guys buy up, using because all these longs turn into shorts that push the market down. They buy using that liquidity to push the market up. So, in this case, I will note it down. I'm not going to take the trade because that's for a separate video, but I just want to explain that, because if in terms of if this had to come straight back into this, we would have seen a nice little sweep here from just my testings. So let's keep moving forward. This is looking less likely to play out fully. We would have been already closed out according to our rules. We do have some internal structure break after like a wick high here. However, we have imbalance above it. So, and this is what I mean. We're coming straight back into it. So it'll be interesting to see if what I just explained there does occur to this high. Let's mark it out. The 15-minute POI. We've got imbalance directly above it. And let's see what occurs. Okay, so yeah, we had that weakness there still. We wouldn't have got tagged into it otherwise. But yeah, interesting to see. Guess the bearish momentum was just too strong there. And we've kept on moving down. And it's good we didn't take this one, like we said. So, no, interesting lessons there. I'll leave that there so I can note it out at the end. But yeah, very interesting. So what we have now, still the imbalance. 15 minutes there. We swept some liquidity, but nothing that we're that interested in here because the final candles are sloped. We want the final candle to be the highest and taking all the recent liquidity. However, like we said, this one that we took is looking pretty good, actually. So Okay, I'm going to mark out these breaks of structure, like internal ones. We've got what these like external market structures here, what the indicators marking up, which is also good to have handy. But we trade with internal structures as well. Nothing. Okay, we had a nice sweep there. Got balance above. Yeah, we wouldn't be taking this one. So let's see. It is a nice sweep, but yeah. Okay, there we go. So that's like, yeah, that's what I was talking about. We had a nice sweep here. However, when we've got all this imbalance left, it does tend to want to clean that up, essentially. I guess, yeah, we didn't reach high enough to get tagged into anything up here. It just pretty much swept all this liquidity, cleaned up with the imbalance, and then dumped back down. So, yeah, it's this pretty much, I think that would have hit its take profit. There's not really anything I'm interested in here either. Everything that's still got imbalance above. So, yeah, I'm just going to see how the market keeps moving. Okay. So yeah, you'll see with us being quite strict with the choice of points of interest, it can sometimes mean, much fewer trades, what we've noticed. But it's kept us out of, well, okay, we wouldn't have got tagged in normally here. We wouldn't be tagged in there either. We would have been stopped out on this one, so taking a loss here. What else was there? I guess like if you took the chalk here, you would have been stopped out there as well. And that was, we weren't tapped into anything, so that wasn't a really reversal point. We didn't really sweep much liquidity or anything like that. Would have been stopped out here. If we took chalk here, would have been stopped out again. So just because there was still liquidity line there. The only one we didn't actually get a nice chalk on London, just created equal highs because it didn't sweep. And that was one, like a really nice entry here with the sweep. The imbalance still left behind here. The chalk on New York, really nice. And that's a trade that played out to 6.5R and 9R if you hold it overnight. So we would only about 3R out of that, but 0 losses is still profit. So just want to talk you over that. So let's keep moving forward. Kept you out of a bit of trouble in this pretty average range here. So all right, let's have a quick look. So we haven't quite tapped the low. Could almost count as a chalk, but honestly, I think it's, yeah. We've got like what I would call, if you're really looking at like scalping, what I call this Australian sweep. I want to explain it every time I see it. We've got the sweep of some reasonably significant lows, at least considering. You've got a break of structure, and then you've got your point of interest from Australia, from the Sydney Open, and then yeah, you see Asia respects it. It's quite awesome actually. So I'm going to mark this up because it really was valid. We swept liquidity, we broke structure with imbalance. Okay, it's like an intra range trade, but this is what has to happen on Asia session a little bit. You have to really take what you can get on Asian session because you often do end up just ranging a lot of the time. So we'd probably just look at this, like aim at the supply that came into the market or something like that, or even like just wait, because London Open's probably going to do its thing and wreck us as it normally does. So you'd probably see if it hasn't reached target. Yeah, there you go. So pretty much we've reached this area of supply that we normally, in a normal strategy, we would be taking this short. However, with our strict rules, we're not actually taking this trade because of the imbalance still left above. So hopefully these videos aren't too boring for you, but a lot of people ask in a group and ask me, how do I what's the most highest probability order blocks? How do I pick the best order blocks? How do I pick the best order blocks so I don't lose? There's no way never to lose. You're always going to lose trades. But this is why I'm doing this research for me and everyone else that gets a bit scared of losing or such, to see if there's a way to minimize them as much as possible, so it's less guesswork to trying to find the order blocks that really have the highest probability. So here, that's another Australian sweep played out for amazing, 9R, really awesome. Normally we'd be, looking to take this short because it's extreme order block with imbalance that led to a breaker structure. However, we've got imbalance above, so in this case, we're not going to take it. We haven't really built any liquidity up either. Maybe we do here and we sweep those highs again and go. But otherwise, potentially we sweep this and then, there's a potential low time frame to short once we close back inside this down there. So let's see what happens. This is all about research. Okay. So yeah, it's all been internal structure. It's nothing I would sort of recommend you trading unless you're, very confident. You would have like a small breaker structure here, small breaker structure here, small breaker structure, blah, blah, blah. Okay, there's no imbalance left behind. Really, in this, there wasn't anything that we would have taken anyway. It's reacted from this candle that swept some liquidity. Maybe it would have been a clue, but probably would have been a lot of guesswork. We've now pushed up, swept these highs. And, potentially on the other would be tagged in, but not when we're running this strict. Okay, there we go. So this time we did manufacture liquidity here, which we talked about before, which, gives the price option to, go short from taking this liquidity and not actually have to run these highs. So that's something we're going to note down again. And potentially this imbalance above is negligible. Well, that word's pretty tricky. Negligible if it's built up some liquidity that it can sweep before the POI. So something definitely to note down. Interesting. That's why I'm doing this to see. So another break of structure, big wick high. However, I guess it did sweep liquidity in a sense. Got some liquidity swept there. No balance left behind really. Maybe on the lower time frame, and then the breaker structure here. So let's keep going forward. So we've tapped into this daily here. Now we're coming straight back into it. We've got almost equal highs and imbalance above. Yep, and there we go. See, and so that's what I mean. So this is, okay, it's a little bit different. This one, we ended up having the high on the inside, which is what we really like to look at. This one, the high was on the outside with a flat top here, which, on low time frame, it would look like there's quite a lot of liquidity ready to take. You end up with two equal highs here with imbalance above. It's just asking for it to get swept. So there was no liquidity manufactured here. What we're looking to see, is something similar to what this did, is, we're reaching up to it and then it's like building up some sort of, highs to like sweep into the order block and then we go down. So this is the liquidity here that the market takes and not the high of the wicks, but that didn't occur. So it has to take it from somewhere it hunts it. So pretty nice sweep here. Very bullish out of this daily. Still only a wick break at this point. So let's see how we go. Okay, that's such a nice cleanup there. Really nice. So, something on the low time frame I'm trying to work on, that we could look in here. Maybe I could just jump down quickly. Let's go maybe the 2 minutes or something like that. See if there's any indications. Pretty fast. Let's go the 1 minute. Pretty much we swept. Realistically, there's potential for, we've swept that, we've come back, and we get a close on the inside here. Potential for a market as soon as you close with your stop loss above the highs, whatever you end up getting, and target the lows again. that's one way to do it. I'm going to perfect that a little bit and come back with you some different videos for the sweep entries. But as you can see, this imbalance is very good to keep an eye on, especially if there's, we come straight back into a liquidity, straight back into a POI. So let's keep moving forward. I'm expecting this to break the lows again, I would assume. It could mess around a little bit, but there's not really anything. This kind of left a weird high as well. So let's keep moving on. Doesn't want to break that low. It's probably just going to do a little sweep, I assume. Okay. There we go. We've got a nice little break. I wonder if that would hold, actually. Let me zoom in. Sweep. Nah, not really anything I'm interested here. We do have a last sweep of the high, so let's mark it up. It ticks most of the boxes. I guess there's really no imbalance directly above it. So there's a potential it could provide continuation. Imbalance below, swept some liquidity, but not like really major. But potentially, especially if Asia comes into it. Tends to respect these highs a little bit better, but no guarantees. Yeah, I'll mark it up. Ticks reasonably all the boxes. I just don't want you guys to be bored. Not taking enough trades, but this isn't obviously just for entertainment. It's for research and data purposes, to be honest. So it's kind of tricky. I really want to stick to the rules hard. But I guess this swept liquidity. It led to a break of structure. Got imbalance below it. So this is what I mean. This is the liquidity it swept. These two highs just. So it'll be interesting to see if that was enough to just take it to the bottom here. Okay, looks like it's broken there again. Got some nice little sweep up the top here. Break. Balance above. So this is kind of looking a bit better, but let's just see. Oh, we're dumping pretty far. And where did we reject? Off here. I guess we did have liquidity there for it to take, so I didn't have to run the highs into the imbalance. So it's definitely something. So the imbalance above, it's definitely, because I thought, imbalance above or below is like a no-go, but it seems that you have to be aware of, how the market is coming into this area. And if there's enough liquidity, if there is some highs, here, nothing to take liquidity from, smash straight through, slight bit here, but, whereas here you had a swept, it had like a mini break in here, plus led to the break, had like these highs, equal highs, so must have been enough to then move us back down without having to tap into here. So I'm going to leave that marked up just for research purposes. We're sort of just like grinding down here, not really anything that I'm interested in. Okay, that looks like, yeah, we've got a little bit of movement around Frankfurt Open. And where did we reject from there? This. Okay. Had some sweep here, had to break, push down, straight back up. I guess this was left over, that's where we reject from. So there was a bit of a balance above, but pretty tricky to know, which one to take. Potentially this one could have been a bit better with the imbalance below, but it had the imbalance above as well. So that was the one that actually held it. But we wouldn't have taken that just because I think it was just a bit more of a guessing game than, to find which one was actually going to hold. I guess it always is, but we've got our strict rules, and none of these were valid in the sense of all of the rules. So we've now had a huge sweep here with a break. So pretty much we've got a valid one here actually. Big sweep, break of structure, imbalance below, no imbalance directly above, a little bit higher, but mainly out of here. We're going to set up. The only issue we have here is targets. We are getting deeper into the daily, so we may have to just take it from the 50%, the 45%, just so we can get enough R&R on there. Okay. Yeah, 2.5. It's probably, just because the sweep is so strong, it would probably be something I would take anyway, and just look at like trailing down the stop. Okay. That's a low. A little bit tricky here. We have like a bit of an internal chock as well, but I think I'd rather this high to be broken first before I'm going to go long. Oh, okay. We survived. All right, there we go. So, yeah, I guess we would have probably closed it out at 3 once it hit there to lock it in. And, yeah, let me just pause that. Someone else is calling me. Oh, yeah. So, yeah, what were we saying? Sorry, I had another call. We close that out around 3. Otherwise, potentially we could follow it down with, low time frame market structure, but I haven't back tested that fully. So, 3R, be happy with that for sure. Even at the breaker structure, 2.5R, it's nothing to be ashamed about. Honestly, not much I like here. This did sweep a bit of liquidity, so actually, I don't like it that the high isn't the last one. But the fact that it swept quite a lot of liquidity, left in balance, broke structure. We've got liquidity here, actually, that could be used to induce it to come in short again. But this is probably one of the riskier ones according to my rules that I would take. So let me just get that going. And we'd just be targeting a low because we're quite far in daily demand. So potentially, okay, let's pause that. What for? Would we had enough? I just assumed it wasn't 3R on the 25. Okay, so we probably would have split it between here. So we may have been tagged in already. Would depend on the spreads of your broker. But let's see. Be interesting to see if this, like how this plays out, whether this plays out as like a chalk sweep scenario where we could have gone long from here because we are in daily demand. It's one of those ones that you could have, been pretty aggressive with, but we'll leave it for now. Okay. Not much going on. I guess realistically, we're on to the next day. We're on Friday, so we, as we say, would have closed this out. What would that have been at? Around, I don't know, whatever that time would have been. Yeah, 9:30. So would have been just like 1.68 because we don't keep things overnight. So let's just see how this plays. Anyway, we may have potentially, put the order back on, but yeah, not really. Wouldn't have been that too keen on it. Obviously, it would have got stopped out. So, which is interesting with the high. So potentially this could have played, like I said. Because we had 3 15-minute candles there, it's like a bit more of a stronger valid shock here. I'm just going to draw it up now just so you can see what I was meaning about. And so this was like your aggressive entry. That would just be based off, we're in daily demand. We've gotten, a 3 candle pullback chock. We still would have been taking the short. So it would have been like a pretty, lower probability, but valid trade. And you would have been just targeting pretty much the highs as well. So probably wouldn't even be enough. So yeah, 2.6R, you probably wouldn't have taken it unless you could have drilled in on some lower time frame. But I just wanted to show you that that's probably what played out there. So we've got a little sweep at the high. Well, yeah, I would say sweeps here. I don't fully agree with this. Because I would have liked to see this high get broken to have it a break of structure. So this is more of a sweep for me. So I'll turn this off for a second and show you what I mean. So like this was our 15-minute high, but we never had a close, so we wicked it there. Okay, and then we then wicked it again. And then, if we had a close above this high, then I would have been more bullish, but it looks like sort of a weak breaker structure to me. So let's see if we get a close above before we're ready for any. Otherwise, potentially, well, let's see what London does. Yeah, perfect. So what I wanted to show you guys, just quickly, this is especially for my Australian and Asia session watchers. It's what I just worked about before that I realized. So we've got this break of structure here. After this nice big sweep on sitting open, filled up this imbalance out of this order block or what that had filled up this imbalance. So, we're just grinding up after this chock. If you were aggressive and took this, you could have been riding this all the way up, even internally. However, I just want to show you this is Australian sweep here. We would have put this on, and you can see with the yellow that the Asia session has respected that low again, as I was saying. And you could have, even targeted the taking of that high as well. Let me put back on the market structure. That's easy to see. Target this, take of this high, and a nice 3. Oh, a little bit more probably. Yeah, 4.27, and that's another the Australian sweep, Asia push. I don't know what you want to call it. I'll come up with a good name for it. Yeah, wanted to note that out. But let's keep moving on. Like I was saying, oh yeah, I turned that off. Like I was saying, is I wouldn't say there's a breaker structure for me. We've had a chock. We've got some internal push, but we've had a sweep of the high. We've had a sweep of the high again, a sweep and a sweep. So let's see where this leads. Okay, so potentially we have a sweep again. We've got sweep, sweep, sweep. Don't really have a strong chock, so it's nothing to really short here, especially because it didn't, it didn't give us an imbalance. We didn't break any structure really, so it's likely to go up again. But let's just see. Yep. Okay, so now it looks to appear, if that one closes, we will have had our breaker structure finally. That's how I read it. Okay, you could have said, yeah, we finally got higher than this line here, but really it can just be a failure of the highs here until we get the sweep, until we get the actual confirmed break of this new wick high, is how I see it. So pretty much what we've got now is the break of structure. Up here, this is still our low. A lot of liquidity left behind. I'm going to zoom out slightly. Nothing really that I'm interested in, but we're just looking for longs now. Okay. Oh, sorry, I went too fast. So realistically, let me have a look. What was this? 130. potentially could have been an area of interest, but we didn't sweep the last highs. It sort of just gave us some equal highs there. So, okay. Pretty much. I wonder actually if I might have missed this one. I wonder if we would have got tagged in. Maybe on the 25. Yeah, okay. So yeah, sorry I went too fast. This is actually valid. It ticked all the boxes. So after we had this push up, we've had, hold on. What I was trying to do is get to the 4 hours just to see, but it would appear essentially we had the chalk, broke this high. Let me just turn off this. It's not really very helpful. Pretty much we had, yeah. Okay, so pretty much what we're looking at, we had the chalk, short-term reversal, pushing up. We've taken out the highs, swept, pushed up, and then pretty much come back down. We never got our confirmation of another bullish move up. So this would have been our 15-minute shock back down to continue our 15-minute bearish structure, and that's where we got this trade in here from. I went too fast and missed it. But all this would have been doing is targeting this previous low here. Okay. Yeah, so if we look at the 4 hour, just looks like it's cleaned up so much liquidity here. Tapped into this old imbalance we had. And then dump back down. However, yep, okay. So where are we at? Not really anything else that I'm interested in. That's still got liquidity left behind. Let's see if anything shows us a bit more promise to continue the downtrend. Okay, I don't know what. Okay, pushing up. All right, so we're getting to Friday night. There we go. Markets are just about to close, and so that will see it off for the rest of this week. All right, so yeah, I hope you guys enjoyed that. We're not taking as many trades as usual because I'm in the hunt for what makes a great order block. So we're being very strict with what we do and what we take generally, and trying to look for the results to see if it's possible to be so strict with your trading like this and still have profitability. It's probably gonna be about a 4-part series to this because I want to do at least a month's worth of data on it. Potentially, I'm looking at next week. I may look at entering trades with imbalance below or above the POI, but only if it presents with some form of liquidity to take before getting into the POI. So we'll see how that goes anyway. Hope you enjoyed this one. If you want to stick around for the next part 3 of finding the optimal order block, that will be coming very soon. And yeah, subscribe, like, share this across. It really helps me out. It's really cool, and you can share all this analysis to your friends, and so everyone can get a bit more knowledge on how to trade this strategy to the best of their abilities. Anyway, we'll just go mark all of this up, get the results, and make a results video at the end. So I'll be right back. All right, so here, I've tallied up all the results. Interesting week. Very little trades, which shows them results. Still profitable, which is pretty amazing. I don't think I've had a negative week since I've been backtesting, which is pretty cool, to be honest. And I wondered how this been so strict with the selection of points of interest / order blocks. So that's why I really want to test this with multiple pairs, because yeah, you can literally just, if you have your strict setup and it works across multiple pairs, you don't have to be staring at the chart the whole time. You have a quick look, see if there's anything that fits your whatever the perfect what we're talking about, the perfect point of interest is. And if there's nothing there, then you set some alerts for breaks of structure. Once there's another break of structure, check if something presented itself again, and just rinse and repeat for multiple pairs until there's a perfect setup. But let's see. So we had 4 wins, 2 in Asia, 2 in London / New York sessions. If you don't hold overnight, you would have made about, what was this, about 6%, risking 1%. If you do hold overnight, it would have been closer to 18% there. Oh no, sorry, because they're splitting the risk across that. So it's 12, 18. So more like 9%, close to 9 or 10% roughly, which is pretty nice, Even the 6% is fine with me. And Australia-Asia session, that was what I really wanted to highlight, this Australian Aussie sweep that I have found. Just trading twice, that presented itself twice with the sweep, and then the break of structure, you would have been able to get, 19, 20, so 10, if you split your risk across that, 10% just from 2 trades on that. So there's a couple extra trades, this one here, that I may introduce a new rule into part 3 now that we've identified a few different things in terms of imbalances above and below the order blocks. So this is definitely would have been valid if we, with the new rule I'm going to implement next time. So for week 3, it would have been, as we built up this liquidity before it, the imbalance here sort of was invalidated. So you could have had another 6% there. But all in all, we didn't tap into that one normally, didn't reach that one. If you were super aggressive, you would have taken a loss there. This one definitely valid, just sweep. And then, we never got back there. And we sort of just pretty much, until here, was just sort of grinding down very close together. Not really many like impulsive moves and pullbacks. So not a bad week. Let's see what next week brings. Still profitable, which is really good signs. If you're scared to take losses, then I think we're getting closer and closer to determining what a great. I say that with air quotes because we still work on probabilities, but what a really good high probability order block looks like. So anyway, I'll see you guys in the next episode and next video. And please like, subscribe, share it around. If you enjoy it, comment, let me know. If you didn't, let me know as well. Let me know what you want to see. Anything that you saw I did wrong. When you're backtesting, you sort of get caught up in the chart so much that you sometimes miss obvious things, unfortunately. But I try to do it as close to real life as possible. Take my time and really analyze it so you can see what I do in the real time on the chart. So anyway, thanks again for watching and see you guys in the next one.